Happy August, everybody. Welcome to the TVC webinar. Pretty exciting day or webinar today because we're going to be talking about a lot of stuff that we're moving forward with and that we're working on. We also have Heidi here. So Heidi runs the closing department for TVC and warehouse funder. And she has a couple slides to present, but then she's also going to be available for Q&A. So remember, stay on the call, write your questions down. You can put your questions in the chat. We're going to, at the end of this, we're going to follow up. We're going to answer anybody's questions. If you want to talk, you come on and ask your question to us. If you have any closing questions, Heidi's here and she's excellent. She's going to be able to help you out. So I just want to give everyone a reminder that we're nearing the end of the month for August. We have a huge pipeline that's sitting currently in the intake pipeline, which means that it hasn't been submitted for conditional approval yet. And because there's only about a week and a half left in the month, we just want to remind everybody, please, if you're trying to close this month, you need to get that conditional approval done. So if you're waiting on that appraisal, see what you can do to get that conditional approval done. And remember that if you're only waiting on one or two documents to get that conditional approval, let us know, right? We'll push that early. We'll try to get it done. We want to get these things reviewed quicker rather than later. So we'll work with you. So just if you have them, you're ready, they're going to close this month, let's get them working. And especially the refinances, if you're trying to close any refinances and you're trying to close them in the last day or two of the month, that's where we get really booked up with purchase transactions. There's only so many files you could close in a day. So if you have a refinance that you know needs to close this month, we really need to start escalating that and getting it done. Good announcement also is that the intake department is growing, so we're adding to the team. You may see new reps working on your files when they come in. So bear with us as we get the training up and running, but we're really excited that from the loans everyone's delivering and the growth that we've been seeing, that we're able to expand the team and keep putting gas on the fire here. One last thing before we get started on the updates is I just want to remind everybody that we do price matching. If you have we always look for terms as well. So whenever you're going to do a price match, we want to see a term sheet, right? Show us wherever the terms are coming from. We'll take a look at that and we'll compare those terms and the price, and we'll try to be as competitive as possible. Sometimes that means a lower price. Sometimes that means us giving you exceptions or potential higher LTVs or higher loan to costs, right? So you get a benefit from doing that. And it also helps us, right? It helps us to see if we're out of market on a specific borrower type or DSCR loan or something along those lines. So please send them in. Keeps us up to date, allows us to be competitive on our pricing. And we want your deals. You guys have good borrowers. We don't want to lose them because of a quarter point, right? Show us what you got and we'll try to match it. Next announcement is the Geraci Activate and Elevate event. If you joined us in Las Vegas in February, the next event is coming in September. So it's end of September and it is in Miami. It's there's a network reception that we're going to be doing and TVC is hosting it. So that's on September 28th and it's from 5 p.m. to 7 p.m. It's sponsored by us. We're going to have cocktails, appetizers. There's going to be a lot of networking there. We have the register thing here. If you're interested in coming, please let us know. The event in February was really great. I think we had 10 to 15 counterparties that we've been working with show up and, not only be present, but we got to meet with them individually. We got to talk to them. It's a great opportunity to connect with your reps. So definitely join us if you're going to be available for it. And the opening party is at LIV Nightclub. So that's September 29th, 8 to 11 p.m. And we're the sponsor for that main event at LIV. So that's food, drinks, a live DJ, entertainment, and networking. And there's the link. So we'll send the link out to everybody post-call here. If you're going to be at the event, we'd love to see you and meet with you. So we'll get something on the schedule. All right, some updates. You guys might have already been seeing this if you're registering loans. We made some updates to our portal. A lot of them just to make life easier, but also to accommodate different types of brokers coming in. So first and foremost is the loan registration screen, where there used to be about 20 fields and we required 7 fields. Now there's 9 fields and they're all required, right? So we removed any fields that aren't required from the screen. So it should just be, hey, fill out all of those data points and hit enter and you're going to create your loan. We also created a new screen called loan submission data requirements. And, rather than leaping through multiple different tabs to figure out what data points you need to enter to submit a loan, or rather than waiting until you hit the submit loan button and it presents them to you, you can just go to that screen. It has all the fields required to submit a loan. you could enter them in there and you could send that through. And then when you hit this, whenever you get your documents uploaded, all you have to do is hit a button. It's not going to ask you to enter in any more data. We've also put in request loan terms. Um, Hopefully, everyone here is trained on the sales tool. You guys are pricing out your own deals. You're not going to need to request loan terms from us. But as we get, different tiers of brokers into the portal, they're going to be requesting loan terms by putting in some data points and requesting a term sheet from us. You guys don't need to use it, right? So it'll show up there. Doesn't need to be utilized by you. If you have any questions on creating your own term sheets, you guys are a higher level of broker, you're a higher level of TPO, you're a higher level of lender, right? You could do this stuff without having to request those terms. And then finally, a rate lock required data. So this is, a big piece of this is that we're going to be allowing you guys to lock loans in the portal. You'll no longer have to request a lock from us. There'll just be a button that you have to hit. And that rate lock required data is just the exact data points you need to enter in order to lock your loan. So if you fill out the data there and then you could hit the rate lock button, it'll allow you to rate lock your loan. And it'll also allow you to manage it, right? So a DSCR loan from the day you register that loan to the day that it gets to an LE or close to closing, your loan structure is going to change inevitably. And if it does, the pricing is going to change. That's now all going to be in the portal. You're going to be able to do a profile change right in the portal whenever there's a change request needed. You're going to be able to reprice your loan and make sure that you're making the right amount of money and that your borrower is getting charged with the correct amount of interest. So the rate lock's coming. It's only going to be for DSCR loans to start, but we're going to be out for fix and flip and ground up construction next. I do expect by, if not the end of the month, really early next month, that rate lock button is going to be live for everybody. So yeah, like I said, RTL and ground up construction is going to take a little bit. Loan submission changes. This one's simple, but for homeowners insurance, on DSCR submissions, we had a lot of TPOs that were getting full insurance quotes before they were even submitting the loan to us. And that's not what we wanted to see. We just wanted to see a quote so we had an idea of what the DSCR was going to look like. We've automated that and we put that into our system so that we're actually calculating an HOI up front. We no longer need you to put that, so we took that bucket out. We don't want you guys to not submit a deal because you're waiting for a full insurance thing before it's even been underwritten. In addition, we've added a loan servicing authorization form bucket. So whenever you create a new loan, you'll see that there's a new document called servicing authorization form. We sent a few updates about this. This is going to be available in our documents tab. It's available today in our documents tab as a template. And that's really exciting because the servicing authorization form is going to go into our next phase, right? Our next phase of the white label project that we're working on. We can jump to the next slide. Ah, I messed up the slides here, so that's my fault. We'll start with large balance loans. I'm going to come back to the servicing side. So if you guys saw that we did a few updates on our large balance loans. So we increased our cap from 4 million or 5 million. We increased it to 6 million on fix and flip transactions, and we increased our up to 7.5 million on ground up construction transactions. In addition to that, we went through all of our adjusters. We removed any of the adjusters for loans under 3 million, and then we've reduced the adjusters over 3 million by 50 basis points, right? So we went through and made all of those loans cheaper. And we wanted to talk a little bit about how to qualify those loans. A lot of people are really interested in this. We've closed a large number of these loans already, just counting everything above 4 million. We've already originated over $140 million in this bucket. As that goes higher, right? As you do a $7 million loan, it's a lot more, we've been originating $4 million loans. So when we go to 4.5, it's not that big of a leap. When you go to 7.5, it's a much larger leap, right? So we wanted to figure out a good way to qualify these borrowers. So we wanted to talk about what you can provide to us to get an upfront approval to run those deals. And it has to be an upfront approval, right? Do not order the appraisal on these deals and just hope we approve them. We do need to look at these upfront. We do an upfront underwrite on them just to make sure that it's something that we can originate to. So what we're looking for on those deals is a net worth. And we're going to do that through a personal financial statement. So they're going to borrower can provide a PFS and an REO schedule, right? And with those two things, what we're looking for is a net worth of about 25% of the total loan request, right? The second thing is a liquidity. We want at least 20% of the total loan exposure and liquidity. And for these borrowers, you got to think, if someone's doing a $7.5 million loan with us, a platinum borrower can only borrow $10 million with us at any given time. So if they have two $7.5 million loans, right, you need to qualify this for both loans, right? So this plays into the Platinum Plus application, and we're leveling out our Platinum Plus application with the needs here. So if those clients are going over 10 million, this is what we're going to be asking for. A year-to-date P&L and balance sheet. And what we're looking for there is that there's no significant impairments, right? We just want a strong functioning business. We don't want to, if someone's failing in one operation, we don't want to take on huge amounts of debt with them somewhere else. And then track record with an anchor deal. We've been seeing a lot of these deals that are coming in where, someone has experience that's maybe commercial, or they have experience in a different market, or their experience is, hey, I built a lot of $2 million homes or $4 million homes, and now I'm going to build my first $7.5 million home, right? We really want to make sure, as this is a new program for us, we need these loans to be successful. We want these borrowers to be successful. We really want to find the borrowers that are out there that have been there and done it. So we want to see a track record where they have an anchor deal in the market, a transaction that they've successfully sold for 7 million would be ideal. We understand not everything's perfect, but that's what we're typically looking for. And if you could send us those documents up front, we could get a good look at it. We could give you an upfront approval on that loan, and then you can originate one of those larger loans. All right. So this is what I was talking about with the phase two of the white label. Our servicing authorization form. So it's going to be required on all loans that you wish to have post-closing access to, right? So part of phase two is that you guys are going to have a login to the servicing portal, and you're going to be able to see all of the loans that closed under you, right? The borrower has to have authorized you in order to be able to see the loan, right? So that's why we have that servicing authorization form there. Again, it's available in the Documents tab. It's going to appear as a bucket on all loans that you guys register with us. And when you guys do get that login, you'll be able to see those loans. In addition, you'll be able to see, hey, how much progress have they made on their rehab budget, right? How many draws have they taken out? When's the last time they've requested a draw? What are the servicing notes on that transaction? You'll have access to those things so you can follow along. And then, hey, if your borrower is frustrated about something, hey, I can't get a draw, right? You can log into the portal, look at the notes and say, hey, it looks like you can get a draw, but you need to give us the proof of permits. Did you get your permits? Maybe they haven't gotten their permits yet. Oh, they're waiting on their permits. They should be back tomorrow. Great, get the permits, and then we'll get the draw out. So you having access to that portal is going to absolutely help you service your clients and help them out when any problems come up. And then combined with that is a TPO personalized landing page. So if you're on this call today and you haven't had your personalized landing page completed, please reach out. We'll get one completed for you. The way that landing page is going to work is it's going to have your logo. It's going to have your name. It's going to be your page. We are going to host it for you. And a link to that is going to be provided to the borrower post close. And the borrower is going to go to the link to your web page that we host for you. They're going to log in, and that's how they get to the servicing portal. So it's just a little bit of, more white label showing that you guys are going to be involved in that post-closing process. So again, we could create those for you. Just let us know if you don't have one. We can also send a form out post-call to everybody that was here talking about, or with an example form that you could send to us. Some loan level process updates that have went live, some of them. So the first one is draw schedule must be executed by the borrower. I'm sure we're gonna have a lot of questions about this. Essentially what's been happening is, and this has been happening for a long time, I think we've talked about it on the webinar before, where we're closing loans, right? And the borrower signs a draw schedule at closing, but it wasn't the budget that they initially sent to their third-party originator, right? So that budget has to get put on our form. And we used to have a much more complicated form. So you guys were completing those budgets for your borrowers and putting them on the form, and maybe things were mislabeled, or maybe we added contingencies, or maybe we moved numbers around after questions were asked, and the borrower was never updated on what the actual budget was going to look like and where those numbers moved around. So what was happening is post-close, we were running into servicing issues where the borrowers were expecting one thing, but we were delivering them something different. That's very difficult to reconcile post-close. So one of the things we want to do up front is we know they sign at the closing table, but they also sign 1,000 other documents at closing, right? Maybe not that much, Heidi. You could correct me when you're up. But we wanted to look at it up front before we get that CTC out. sign that draw schedule, confirm that it's right. That way, if they have any edits with it, or if anything doesn't make sense, or if those numbers have changed and they're confused about it, now's their time to ask questions. So it has to be completed by the borrower. We've automated through the warehouse funder that it gets automatically docu-signed. You could say basically it's part of the boarding of the servicer. That loan is going to get automatically docu-signed to your client. The loan officer and the processor of your company will be CC'd on those emails. So you should receive a notice when those go out. Your borrower signs it, it gets automatically uploaded to the portal. So there's nothing you have to do. We did streamline that process. And then another big thing is the post-close boarding and draw process. So this has changed recently. We used to, well, let's talk about when loans board. So as of now, and this is subject to change, completed loans board every Friday. So at the end of every week, we board all of our closed loans, and they don't get fully boarded until Wednesday of the following week, right? So there's a gap there, right? If you close on Wednesday and then you won't get boarded until the following Wednesday, or you won't get access to your servicing portal. So if you want to request a draw, you've got to wait until you're actually into the portal. In the past, we used to service those draws before you got into the servicing portal. We are unable to do that anymore. There's too much difficulty keeping track of those draws getting released and whether or not they were getting accounted for in the servicing. We're working on fixes up for it, but as of now, your loans have to board and they have to be with the servicer before your borrowers can request a draw. So if you have a borrower that was on a, is doing some sort of refinance and they already have a bunch of work done and they're going to request a draw, just give them a heads up of that they're going to have to wait until that servicer thing, until they get boarded. And not that we're analyzing this, we're reviewing it, we're trying to come up with better processes. We want to get this streamlined. We want to make sure that the communication between us and the servicing side works completely smoothly. But in the interim, this is the current process, and it's definitely something you should explain to your clients. Homeowners insurance is no longer required for conditional approval on DSCR loans. So again, that's part of the portal, right? If we remove the document placeholder from the portal, then it's not required for the underwrite, which means you guys can get conditional approval without insurance. And then coming soon is additional automation of track record review. I'm actually pretty excited about this. Whenever we have a borrower that comes in or a TPO that brings us a loan, sometimes they give us a loan with 10 items on the track record, and sometimes they only validate 8, right? Through some reason, maybe you didn't upload a document, or maybe it was a different entity and you didn't realize that one transaction was in a different entity name, so we didn't have the articles for it. We are working on automating that system a little bit. So yes, we're still going to rely on you to get us the package, get us the track record. But the automation is going to come in for us having different ways to scan those and review those track record items and potentially fill those gaps for you. So rather than us coming back and saying, hey, 1 or 2 items is still necessary for this, ideally, we're going to be able to resolve those internally, right? And if track record was the only thing holding you back from conditional approval, we're going to save you a full day or 2 days because we're not going to have to wait for those updated items to come in. We're going to be able to find them ourselves, push it forward. All right, and now I'm going to hand it off to Heidi for the closing overview. She's going to talk about some closing processes, and then we'll go from there.
Thank you, Brendan. Afternoon, everyone. We get quite a bit of questions in closing, so I thought it would be helpful if I came on here and at least gave a brief overview and some tips that can help make your closing and funding go a little smoother. First, I wanted to go over the actual file flow. Once a file gets into closing, it is CTC, and the closer will reach out to schedule the closing. The closer then sends the instructions to title and awaits a HUD. We ask that you guys review the HUD because this is the perfect opportunity to realize if your broker compensation is incorrect or loan amounts are wrong or any of that kind of stuff. So it is very helpful if you just take a moment and review the HUD. We then prepare the doc package and submit it for review. I'm not sure if everybody knows, but all loans do go through a QC review. We try to get those reviews completed within 4 hours to kind of give you a time frame. Most of them are done prior to the 4 hours, but sometimes it does get a little bit heavy in closing. So the 4-hour SLA is what we try to hold to or sooner. Once the QC is reviewed and it's approved, the closer releases the docs to title. And then title will send the package along with any other funding conditions. The funder will review the file and then request the wire. When you're reviewing your HUD, it is helpful if you understand how your compensation is calculated. So what we do is we take origination plus any administrative fees minus the TPO premium to calculate your net proceeds. For instance, if it's an origination fee, underwriting fee, and processing fee, all those fees get added together. We withhold the TPO premium from the wire, so your title agent will withhold that amount from your proceeds to arrive at the net proceeds. Finally, some tips that we might help you with on a smooth closing. The bill of sale is required for all funded notes effective July 1st. We no longer require the assignment or the launch, only the bill of sale. The bill of sale can be electronically signed and it can be e-delivered without the original trailing. The ACH is required on all DSCR loans and any loan in which the term exceeds the escrowed payments. If you have a 24-month term and 24 months of escrowed payments collected, no ACH is required. However, if you have a 24-month term and 18 months is collected for escrow payments, ACH will be required. This goes for all loans except for DSCR, in which the ACH is required on all of them. Proof of borrower funds is a requirement for wire release and often holds our wires. So please be sure your borrowers are getting those funds to the title agent as soon as possible. And finally, your wire cutoff is 4:30 Eastern, and our funding email is fundings@warehouse-funder. I'll give it back to Brendan if there's any questions.
Yeah, I got a question for you. What is something that a TPO can do to make the closing department's life a little bit easier?
I think the HUD review is important, and the bill of sale, and understanding the time frame that it takes us. We're not holding back. We're not trying to slow down. We're kind of in a process flow that takes a little time. So bear with us. We'll get
Yeah.
it for you.
We're all people, right? We're just working through it. We're trying to get through our files. We're trying to get everything done so that we can get those deals funded. And I would just say about reviewing the HUD, make sure you're reviewing like the final HUD, right?
Yeah.
Don't review the HUDs that are going back and forth, because those ones still need to be updated to get all of these compensation numbers correct. So if you look at an early HUD or the first go at a HUD, you might say, hey, this doesn't make any sense. This is wrong, and you'll be reaching out and calling us, but we're going to work through that. Make sure that your HUD is going to match the LE, right? So if you have the LE, the loan estimate, make sure you're reviewing that. HUD's going to match it. If it doesn't, that's when definitely reach out to us and let us know. All right, we're going to open it up so you guys could put in the chat, or you can raise your hand if you guys have any questions. Anything for me, anything for Heidi. Please post them in the chat or raise your hand, and we'll call on you guys and we'll get them answered. Oh, the chat is disabled. I just got a note. Is there any way we can enable the chat? Can anybody try to raise their hand? Oh, there we go. It looks like the chat is fixed. Sorry about that. If anybody was trying to type, we did not get the message. There we go. Hey, Sandy.
Hey, Brendan. How are you?
I'm doing wonderful. How are you doing?
Good. Hey, I just heard you saying look at your loan estimates and the HUD. So your combination of documents is loan estimate and the HUD, or good faith estimate and the HUD?
No, so we prepare a loan estimate prior to getting you a clear to close on your file. And that loan
Okay.
estimate's going to give you all of the details of your loan, including your compensation, right? You have to sign that before we'll actually submit your file for CTC. We just want to make sure that you actually look at the compensation, right? The first time you realize something's wrong shouldn't be at the closing table, because if you notice it on the LE and say, hey, it says I'm making, negative points here. How is that possible? You could correct it right there, and we can update it before the closers even get the file.
So when you talk about this LE is for the TPO, in other words, not
Yes.
to the borrower in any way or whatever.
Correct.
Loan estimate. It's a terminology that you guys use. It's not the TRID loan estimate that you're talking about.
Correct. Exactly.
Okay. Got it. Okay.
Yep.
That was my question.
All right. Thanks, Sandy.
Hey.
Anybody else? We must be pretty good. Alrighty. All right. Oh, here we go. If there are updates needed after signing the LE, for example, payoff needs to be adjusted. Do you guys send an updated LE to be signed? I would say yeah. Almost always we want to have an updated LE signed when things are changing. I mean, we had an issue where there was a 9 pack that got to the closing table and the price changed a little bit. We kicked it back. We had to get 9 new LEs printed out and sent out, and then pushed it back to closing after we've updated the pricing. So we always want the LEs to be updated, and whenever we do change things, we do update it. So on the LE, there's even a spot for you to actually suggest the edits, right? So you can actually put right in the LE what you would like to change, and we'll change it and send you an updated LE. Yep. All right. Last opportunity. Anybody else have anything else for us before we jump off? All right. Well, I just wanted to say thank you everybody for attending. This is a really exciting time at TVC. I'll say that now all the kids are getting back into school. We have some loans to close, right? So get your borrowers. They need some houses to start working on before the end of the year. Quarter 4 last year was the busiest quarter of our existence, and I think it's going to happen again this year. So keep the loans coming. We're going to keep executing on them. Thank you for hearing out the updates, and we'll have another one of these Quarter 4. Thank you, everybody.